Sunday, 10:47 p.m. Michael opened his laptop to check one bill. Soon, 6 tabs appeared: his bank, 2 credit cards, an insurance renewal, a forgotten subscription, and advice on debt versus investing. He earned nearly 6 figures, yet money still owned his attention. Every unfinished financial decision became a debt repaid with future time. Michael thought he had a money problem. He had time debt. Subscribe if this feels familiar. Michael was responsible. He had a stable job, regular raises, and a family that had never faced a serious financial crisis. The major bills were paid. From the outside, life looked organized, but his finances had grown in pieces. An old checking account from college, a joint account with his wife, 2 credit cards with different due dates, a retirement account from a previous employer, another through his current company, subscriptions spread across several cards, and a debt balance without a repayment plan. None seemed dangerous alone. Together, they formed a system no one was truly managing. Michael kept telling himself he would sort everything out next weekend. But every weekend, something else felt more urgent. The problem was not one large financial mistake. It was the dozens of small decisions Michael kept carrying into the next week. It usually began with something small. An email appeared while Michael was working. A bill was due. A card's annual fee had changed. An interest rate was being updated. Nothing looked urgent, but it was enough to pull his attention away. He opened his banking app to make sure everything was fine. Then one question created another. Which account was paying this bill? Was the automatic payment still active? Why was there a charge he did not recognize? He opened the transaction, traced it back, and realized it belonged to a subscription he had meant to cancel months earlier. What was supposed to take 5 minutes became 40. The same thing happened whenever Michael tried to think about investing. One article told him to pay off every debt before investing. Another warned that waiting meant losing years of compound growth. Someone else said to hold more cash because the economy felt uncertain. One expert recommended a simple ETF. Another preferred gold. Another argued that a small allocation to Bitcoin could make sense. Then came the safest sounding advice of all: do nothing until you fully understand everything. Michael kept reading because he wanted to make the right decision. But the more information he consumed, the less qualified he felt to decide, so he postponed it. The problem was that postponed financial decisions did not disappear. They stayed open. A bill that was not automated created another reminder to check. An account that was not tracked created another login. A debt without a plan created another night of worry. A portfolio that felt too complicated created another round of doubt whenever the market moved. A tax document left in the wrong folder became work for Michael months later. Each task looked too small to deserve immediate attention. Together, they formed a background process that never stopped running. Michael had not abandoned his finances. He was thinking about money constantly. He remembered bills during meetings. He searched investment questions late at night. He carried unfinished decisions from one weekend into the next. That was why he felt so tired. He was not managing money through a clear system. He was managing it through memory, guilt, and sudden reactions whenever something became difficult to ignore. Every task Michael postponed looked harmless, but each one was quietly charging interest, not in dollars, but in attention. The cost did not arrive as one dramatic loss. It leaked out slowly. There was a subscription Michael no longer used, an annual fee on a card he rarely opened, a late payment because the reminder was buried in his inbox, cash sitting across several accounts without a clear purpose, a workplace benefit he had never understood, and after a stressful week, an online purchase that offered a few minutes of relief. None of these losses felt large enough to force action. That was why they survived. Michael had no single place where the system could be seen. But money was not the only thing leaking away. During work, Michael would suddenly remember a bill. While playing with his son, he would wonder whether the family was saving enough. Before sleep, he would check an account balance, hoping the number might quiet his mind. The money was not only sitting in accounts, it followed him through the day. Every small decision consumed energy he needed for larger ones. How much emergency savings would make his family feel secure? Which debt deserved attention first? What kind of retirement was he trying to build? How much investment risk could he live with? What skills could help him earn more? Those questions mattered far more than another forgotten subscription. Yet Michael rarely reached them with a clear mind. A higher salary had not solved the problem. It had made the system more complicated. More income brought more accounts, more choices, and more ways to postpone what mattered. The strain eventually entered his marriage. When his wife asked about their long-term plan, Michael gave the same answer. "I'm looking into it." He meant it. But months passed, and the answer did not change. There was no crisis. Their bills were paid. Their lives looked stable. The tension came from something quieter, the feeling that no one could clearly explain where the family was going. Michael did not need another budgeting trick. He needed to understand why unfinished financial decisions kept returning with a larger emotional cost. Money debt is easy to recognize. It appears when you use future income to pay for a choice you make today. Time debt is quieter. Time debt begins when you postpone organizing something today and force your future self to think about the same problem again. An unfinished decision does not disappear. It moves forward. And when it returns, it usually brings more with it. Another email, another fee, more information, more uncertainty, and often more guilt. Michael began to see that his financial time debt had 3 layers. The first was administrative debt. These were the small tasks with no clear process: finding a bill, resetting a password, checking a due date, saving a tax document, tracking subscriptions spread across different cards. None of these tasks were difficult, but because they had no home, they kept returning. The second was decision debt. These were the larger questions Michael had never turned into rules. Where should the next extra dollar go? When should debt take priority? What risk was his emergency fund supposed to protect against? Was a new financial product helping him reach a goal, or simply adding another layer of complexity? Then came the third layer, attention interest. This was the cost of remembering that something was still unfinished. Even when Michael was not working on the problem, part of his attention remained attached to it. He could ignore a task, but he could not fully release it. That was where AI could help, but only in a limited and practical way. AI should not choose Michael's investments. It should not decide how much risk he should take. It should not replace his judgment on decisions that affect his family's future. But it could act as a financial operations assistant. It could organize the information Michael provided. It could group expenses into categories, list upcoming bills, identify missing information, prepare a short weekly summary, explain unfamiliar terms in plain language, and help Michael prepare better questions for his bank, tax professional, or qualified advisor. That distinction kept the tool useful without allowing it to become the decision maker. The goal was not to hand over responsibility. The goal was to remove the unnecessary friction surrounding responsibility. But Michael also learned one important rule: simplify before you automate. If he automated a chaotic system, he would only make the chaos move faster. So before adding any tool, he reduced the number of decisions the system demanded. Fewer unnecessary accounts, fewer scattered payment dates, fewer subscriptions hidden across different cards, fewer investment ideas he did not understand. One place to track the goals that actually mattered. From that came a simple 4-step process. Map the entire system. Simplify what does not need to be there. Systemize the decisions that repeat. Then review everything at a fixed time, instead of worrying about it all week. The point was not to think about money faster. It was to build a system that required him to think about the same problem fewer times. Once Michael saw time debt as a system problem, he stopped trying to become more disciplined and started redesigning the system itself. Michael did not rebuild his entire financial life in one weekend. He followed the 4 steps slowly. First, he mapped the system. He listed every active account, debt balance, recurring bill, payment date, workplace benefit, short-term goal, long-term goal, and question he still could not answer. He did not ask AI to make decisions for him. He used it to organize the information into a clear, 1-page summary. For the first time, he could see the whole structure without opening 10 different tabs. Then he simplified. Michael closed an account that no longer served a clear purpose. He canceled subscriptions he no longer used. He brought recurring bills into one tracking system and reduced the number of places he had to check. He was not trying to build a perfect system. He was trying to build one with fewer points of failure. Next, he systemized the decisions that kept repeating. He created reminders before payment dates. He chose one place for financial documents. He wrote a simple priority list for extra money. He set up a short report for unusual transactions. And before adding any new financial product, he gave himself a small set of questions to answer first. What goal does this serve? What does it cost? What risk does it add? Do I understand it well enough to maintain it? Each rule removed a decision Michael had been making again and again. Finally, he created a 20-minute money meeting each week. Instead of checking accounts whenever anxiety appeared, he reviewed one summary at a fixed time. It showed him what had changed, what needed action, what only needed monitoring, and what he could safely ignore. Any money he recovered was not treated as free spending. Michael directed it according to the priorities he had already chosen, strengthening the family's cash reserve, addressing debt obligations, and learning about a long-term investment approach that matched their goals, timeline, and comfort with risk. After a few weeks, the biggest change was not the balance in any account. It was the space in Michael's mind. He had not solved every financial question, but for the first time, those questions had a place to go other than his mind. Sunday, 10:47 p.m. Michael read one short summary, noted a task for Monday, and closed his laptop. Financial freedom was not only having more money. It was building a life that required less attention to manage it. Money debt takes from your future income. Time debt takes from your future life. A good financial system should reduce both. What financial task keeps stealing your time each month? Share it below and subscribe for more practical ways to build a calmer financial life.